Hello and good morning. My name is Francine Harrigan. I'm with the United Nations Department of Public Information. We're very pleased to have you join us today for the launch of the United Nations World Economic Situation and Prospects as of mid-2017 report. Today, to tell us about the report, I'm very pleased to welcome Diana Alarcón, Chief, Global Economic Monitoring Unit, Development Policy and Analysis Division, UN Department of Economic and Social Affairs. And to my far left, Holland, Senior Economic Affairs Officer, Global Economic Monitoring Unit, Development Policy Analysis Division, again, UN DESA. And with that, Diana, let me turn the floor to you. Thank you.
Thank you very much. And thanks to all of you for being here to the launch of the World Economic Situation and Prospects as of mid-2017. Well, thank you for joining us for a discussion on the state of the world economy as of mid-2017. The report presented today updates forecasts from the UN flagship publication World Economic Situation and Prospects 2017, which was released in January. The report confirms that at the global level, economic growth has strengthened in recent months in line with the forecast presented in January. Industrial production has picked up, world trade is reviving, and economic sentiment has generally improved. World gross product is expected to expand by 2.7% in 2017 and 2.9% in 2018, unchanged from the previous forecast. However, the modest strengthening of economic activity has not been evenly spread across countries. We are seeing a general uptick in growth in many of the large developed countries, improved prospects in many economies in transition, and continued robust growth in East and South Asia. However, the strength of recovery remains insufficient in many regions for rapid progress towards achieving the Sustainable Development Goals. For example, average incomes in several parts of Africa and in South America actually declined last year and are projected to increase only slightly in 2017 and 2018. Of particular concern is the deterioration of prospects for some of the world's poorest countries. Average GDP growth projections for many of the least developed countries have been revised downward. GDP for this group as a whole is expected to rise by just 4.7% in 2017 and 5.3% in 2018. This is significantly below the SDG target of at least 7%. The report warns that under the current growth trajectory, without a decline in income inequality, nearly 35% of the population in least developed countries may remain in extreme poverty by 2030. Ending poverty in all its forms in the current economic environment will require countries to tackle inequality issues more rigorously, including commitments to share prosperity both within and across national borders. The report also highlights the high degree of uncertainty in the international policy environment, which continues to cloud the outlook and heightens uncertainty around prospects for world trade, development aid, and climate targets. We aim to realize a world where every country enjoys sustained, inclusive, and sustainable economic growth and decent work for all. To meet these ambitious goals, countries will need to reinvigorate global commitments to international policy coordination to achieve a balanced and sustained revival of global growth, ensuring that no regions are left behind. Thank you.
Thank you, Diana.
Thank Thank you very much. Thank you, Deanna. Thank you, Francine. So just to review some of the details underpinning the World Economic Outlook report that we present today. As mentioned, we have seen an onset of a modest strengthening of the global economy, which kicked in about November last year. And has continued into the first months of 2017. And this was in line with the forecasts that we released last January, so it's not a surprise. The world economy seems to be evolving as anticipated. So we continue to forecast world GDP gross product growth of 2.7% for this year and 2.9% for 2018. Although, as we highlighted in January, these rates of growth still remain well below the average growth rates prior to the global financial crisis in 2008 and 2009. Of more concern is that we've seen a slight shift in the distribution of growth. And forecasts for some of the world's poorest countries have actually been revised down since January. And as mentioned, in the least developed countries, we're forecasting growth of just 4.7% for this year. That compares to the Sustainable Development Goal target of 7%. We aim for such a high rate of growth in order to allow faster progress towards improving living standards and towards achieving the Sustainable Development Goals. And our concern is that the rates of growth that we are seeing, not just in the least developed countries, but in several regions, remain below what is needed to make that rapid progress. In the world gross production and world trade both slowed to their slowest level since the financial crisis last year. And we have seen the uptick in growth since then. So world trade has begun to rebound, and that's been driven particularly by rising demand from East Asia. So in the chart, we see the contribution from the region in red, very large contribution in import demand coming from the emerging Asian economies. Some further detail on regional developments. We've seen firmer growth in many developed economies and have slightly revised up forecasts for both the United States and for Japan. Economies in transition are also on a slightly stronger footing, with the decline in output in the Russian Federation was smaller than had been expected last year, and we see a slight rise in the oil price and also some structural adjustment in production, which is rebalancing away from imports towards domestic production in several of the energy exporters. East Asia and South Asia we highlight as remaining the two most dynamic regions of the world economy, with East Asia expected to expand by 5.6% this year and South Asia by 6.7%. Latin America and the Caribbean and South America in particular are recovering more slowly than had been anticipated, so we've slightly revised down the prospects for that region, which as a whole is expected to grow by just over 1% this year. And forecasts for Africa have also been revised down, forecasting growth for the continent as a whole of 2.9% in 2017. Although we have seen some rise in commodity prices, which is benefiting the many commodity exporting countries in the region, this has been largely overshadowed by domestic and regional pressures, for example, related to conflict, to security concerns, and also to weather pressures through drought, which have impacted many countries in the continent. As just to reiterate regarding progress towards the Sustainable Development Goals, last year we actually saw average incomes decline. So the bar is pointing downward West, Central, Southern Africa, and also Latin America and the Caribbean regions all saw average incomes decline. So rather than progressing towards the Sustainable Development Goals, we've actually took a step back last year. And for most of those regions, we're expecting only minimal growth in GDP per capita this year and next. So in the short term, the progress that can be expected in many of these regions remains very limited. And that we also raise the longer-term implications of that. If we don't see an uptick in growth in many of these countries, the targeting zero extreme poverty by 2030 is going to remain a target that is extremely difficult to reach. Our projections for poverty headcount ratios in the least developed countries suggest that without a more rapid GDP growth and without redressing income inequalities, we may still see 35% of the population in these countries in extreme poverty by 2030. And countries, the highly indebted poor countries and those in fragile or conflict situations are particularly vulnerable. We also raised some shorter-term concerns related to poverty, in particular high food prices, which are impacting 26 countries around the world, of which 2/3 are in Africa, which has a disproportionately negative impact on the poorest households in those countries. And also, of course, highlight the fact that South Sudan is already declared famine, and several other countries are at high risk of famine or food insecurity. Clearly, we're looking at deepening inequalities both within and across countries in the very short term. The report also highlights some more positive elements in terms of the environmental targets. We've seen the level of global carbon emissions stall for 3 consecutive years in a row now, despite the fact that the global economy has expanded, albeit at a relatively slow rate. And this reflects switches from coal to natural gas, more renewable energy use, improvements in energy efficiency, and also a slower GDP growth in some of the major carbon emitters. The report also warns that if commitments to climate targets begin to wane, then this could easily reverse the recent improvements that have been seen. So there is a need for concerted efforts both from the public and private sectors to continue the drive to promote energy efficiency and promote renewable energy use. And finally, some of the risks and policy challenges highlighted in the report. As we mentioned, tackling poverty is going to be a difficult challenge in countries where growth remains weak. We need policies that will target both faster medium-term growth and policies to redress inequalities. So in the shorter term, that would some of the measures that would help to address this would be direct transfers to support consumption amongst the most deprived members of society. But over the longer term, we have to ensure that we broaden access to healthcare, to education, and improve rural infrastructure. The report highlights the heightened uncertainty in the international policy arena, which continues to cloud the outlook, which was something that was raised in our January report as well. There are some major shifts in international policy ongoing, which leads to a high level of uncertainty and hinders the rebound in global investment that we need in order to put the global economy back on a faster growth trajectory. And we remain uncertain about the prospects for world trade, for development aid, for migration, and climate targets in particular. And finally, the report calls for renewed commitments to deeper international policy coordination in key areas of global concern, such as aligning the multilateral trading system with the 2030 Agenda for Sustainable Development, expanding official development aid, implementing climate policies, and protection of refugees. And that concludes our key findings of our report. Thank you very much.
Done with that, I'll open the floor to questions. If you can state your name and organisation. Thank you.
Hi, yes, Sherman Briceby, South African Broadcasting, on behalf of the UN Correspondents Association. Always good to get some bad news on a Tuesday morning. I was just looking at the numbers for Southern Africa. 1.9% in 2015, 0.7% in 2016, 1.8% this year. Clearly, I mean, if comparatively, if we look at what's going on in East Africa, I mean, the growth there, 6.7, 5.5, it's just astonishing what the East Africans are doing. So can you sort of just talk about what the differences are? I mean, I know South Africa's there. There's a low base in East African countries, smaller economies, that sort of thing. But also, if you could also talk about, you've mentioned some of the concerns, drought, conflict, but not so much conflict in Southern Africa. So what can Southern African countries do really to get out of this growth trap? And you also talk about policy uncertainty. How does that apply to the region I'm interested in?
Thank you very much. So yes, Southern Africa is actually one of the regions where we haven't revised down the growth outlook for the next 2 years, but it is also the slowest growing region of Africa. South Africa obviously dominates the region by economic size, where growth has been held back by a number of factors. So reliance on commodity exports is one factor which holds back the region. The drought also had severe impacts in several countries in terms of agricultural production. That said, that also impacted East Africa, where growth is much stronger. The East African countries are coming from a lower starting base in terms of levels of income. So in that sense, there's a sort of catching up period, where we would expect and hope to see a more rapid period of growth. So it's to some extent that's a sort of normal balance. But I think institutional blockages also are a problem that several of the Southern African economies face, which is holding back growth prospects and very high levels of unemployment, which is extremely difficult to tackle in the short term. It will be a sort of longer term project to bring the unemployment rates down, expanding, so moving away from over-reliance on the small commodity sectors and broadening to a wider economic base, which could help to redress some of those issues.
Is that the policy uncertainty you're talking about, though?
Policy uncertainty. So the main issues in policy uncertainty we relate primarily to policy changes in the large developed economies. So changes in the United States policy, also changes in Europe related to renegotiations of trade relations, financial market relations, etc., related to the withdrawal of the United Kingdom from the European Union. Some of these have global impacts as well. So if there's a significant shift in global trading policy, a rise in unilateral protectionist measures, then that would have global impacts which would be felt everywhere.
One here, and then please. And then maybe we'll take three at the same time, and I'll come to you.
Thank you very much. Thank you for this interesting briefing. This is Majid Ghali, Rudao Media Network. I have three questions. First one, I want to ask about the globally. In the major uncertainties and risk, you talk about how financial markets are still vulnerable. I want to ask you how vulnerable the financial markets are. Are you expecting? How possible is an economic crisis just like the one in 2008? Did we build any immunity for that? And the second question is about the Western Asia and Middle East. You're talking about a cautious optimism in the Gulf and oil-rich countries. What's your projection for oil price in the 2017 and 2018? Does that optimism based on realistic expectation, or they are just the usual optimism we see in OPEC members, and sometimes it's not realized? And the second one, a third one, in Iraq, you talk about economic stabilization have started to emerge in Iraq. Can you talk more about that economic stabilization? In the report, it says there are several signs of economic stabilization in Iraq. Can you tell me what are those signs, or is it just related to the oil price again? Thank you.
Thank you. And I'll take the second question.
Thank you. Yoshita Singh with Press Trust of India. India's growth projections have been revised downwards from 7.7 to 7.3%. Can you explain as to what led to that downward revision? How much did demonetization have an impact? Because in the January figures that wasn't taken into account. And also for next year, it's a 7.9% growth, which is pretty impressive. And so why has that been revised upward for India? Thank you.
Thank you. Are you okay if we take the third one, or would you rather address those? We'll take yours.
Okay, thank you very much. Waldo from Prensa Latina. What are the main challenge for LDC's countries in terms of economic growth, and in particular for Latin American and Caribbean region? Thank you very much.
You need that repeated.
Just repeat that. What are the prospects for Latin American and Caribbean region? Was that the question?
The main challenge for LDC's countries, and in particular for Latin American and Caribbean.
Thank you.
Okay, so let's start with the major uncertainties, financial market uncertainties and risks. How likely are we to see another global financial crisis? We don't think there's a high risk of a global financial crisis emerging in the short term. But what we have seen is a level of optimism in financial markets, which to date has not been backed up by stronger developments in the real economy. We've seen this marginal uptick in global growth and recovery in global trade, but to date, we haven't really seen the developments in the real economy that match the level of optimism that we see in financial markets. So one of the risks that we highlight is that there could be a sudden shift in confidence when these expectations are not realized, which could then trigger a sharp slowdown in the global economy. We don't think that's not our sort of central forecasts. Wouldn't say it's sort of like 40% chance, but it is a sort of a risk that the global economy faces. But like I say, we don't think that we're going to see a global financial crisis in the short term. So the outlook for Western Asia and projections for the oil price. So the oil price, what we expect is the oil price to remain volatile. That is, rather than put an actual number on it, we don't expect it to rise to high levels. For this year and next, we have sort of $60 as the sort of max that we might expect. neither do we expect it to fall to the very low levels that we saw in the beginning of last year, but remaining in the sort of $50 to $60 per barrel range is what's anticipated. That is higher than what we saw on average for last year, and so that should be bringing some return to growth in Western and Asian oil exporting countries. But we also see the cutbacks in production, which are likely to be extended now until sometime into 2018. So the volume of oil production is offsetting to some extent the rise in the price. So revenues should be more or less stable, but we're still we still see a strong need to diversify, particularly for the government sectors, to diversify away from over-reliance on oil revenue to finance the fiscal needs. In terms of the signs of economic revival in Iraq, I can't give you any specific details on that. Perhaps one of our experts can enlighten more on that after the briefing today, but it will be reflected in the most recent data that's available, which there's minimal amounts of data, so it will be stemming from there. On to India. We don't really see that the dynamics of India have shifted very much. So what you correctly point out is the slower growth this year and faster growth next year is more a shift in the timing of expenditure, which is largely related to the demonetization policy, which did have an impact, slowing domestic demand in the short term, but we don't see this as having a longer term impact. It's a sort of transitory effect on the economy as a whole. So it still remains one of the fastest growing countries in the world. And what are the key challenges facing the least developed countries? As I think we mentioned, the high levels of poverty remain an enormous challenge. To redress that without faster economic growth requires policies that will address income inequalities. These are difficult politically to push through and remain a significant challenge. This is not just a challenge for the least developed countries. I think we should remember that the 2030 agenda was something that all the countries signed up to. The global responsibility to address these issues is there. So it's not just simply a burden that is placed on the least developed countries themselves. And finally, a note on Latin America and the Caribbean. The recovery that we were hoping to see towards the end of last year in Brazil and Argentina didn't emerge as quickly as hoped. We still do see a recovery coming to those countries this year. But given the weaker starting point, we've revised down the outlook. So we're not expecting to see a rapid revival. Their high unemployment rates are holding economies back. Fiscal pressures remain, so there's less scope for fiscal policy support in the short term to speed the recoveries there.
And then Matthew, if you come in, Tess.
Thank you. I'm Alex Zelenin with TASS News Agency. If you could please elaborate a little bit on the effects of the mutual sanctions that are in place between Russia, European Union, and the U.S.? How hard are they hitting the economies of the countries? Thank you.
And I'll go to Matthew if you...
Sure, thanks a lot. Matthew Lee, Intercity Press, on behalf of the Free UN Coalition for Access. Thanks a lot for the briefing on the report. I have two questions. One is, in looking at this, unedited advanced copy, I just wanted to know, when I see discussions of, for example, inflation in both Egypt and Jordan, I'm covered the IMF too, and it's slightly different what they've been saying recently. Like, for example, there was an IMF something they put out today saying that inflation is actually down in the country, and they've praised Egypt's work. So I'm just wondering, generally, rather than just on these two countries, what is the relationship between this report and, for example, another part of the UN system, the IMF? Are these two totally different inquiries, and where they clash, like, which one should we believe, according to you? And the other one was a sentence about the U.S. Obviously, I see the things about policy uncertainty, but this document seems to say, your document seems to say that the policy agenda in the U.S. has some upside potential, expansionary fiscal policy with an emphasis on infrastructure, could raise private investment and outputs in the short term. I just wonder if you could say more. It seems is it correct to read this as sort of praise or seeing the upside of proposals by the current U.S. administration? Thanks a lot.
Thank you.
Okay, thank you very much. So what are the effects of sanctions and how hard are they hitting? Sanctions clearly have some impact. Access to international finance has been restricted in the Russian Federation, which has held back the recovery. We do see the economy recovering this year, and one of the things behind that is that shifts in the production structures, which partly was in reaction to the sanctions, so looking to replace imported goods with with domestic production, and that has been quite successful in some sectors. So that is one of the factors behind the projection in the stronger growth for this year. Our forecast, I think, is for 1.5% growth this year. So yes, there are impacts, but they've been in place for an extended period of time now, and the economy has started to sort of grow around them to accommodate those. So on who should we believe, this report or the IMF? That's very easy. These are completely separate. So we don't discuss our projections with the IMF. They don't discuss their projections with us. We are using the same basic information in terms of the data that's underpinning these forecasts. There may have been an extra month of inflation data that was released between when we finalized our forecast numbers and the report that they just released, which could explain any discrepancies there. But in terms of the U.S. policy agenda, without putting any value judgments on whether we are promoting or are not promoting, we purely make the observation that if one of the shifts in policy were the introduction of a significant rise in an infrastructure investment, that would necessarily raise the rate of growth in the short term. The longer term impacts are harder to assess, particularly because of the potential for fiscal sustainability effects.
Thank you. And with that, that ends today's press briefing. Let me thank our presenters again, and also for all of you for joining us today. Thank you.